but stocks only go up. This has to be wrong, right? No, welcome back to the channel, guys. So today we're talking about the stock market. We're gonna look at a couple stocks individually, as well as look at Netflix very briefly. So first off, year to date, the NASDAQ composite is actually down 10.6% year to date, and we're on track to have the worst January in terms of the NASDAQ in a long time. And what's crazy is we're not even in a recession, so and inflation's up too, so it's kind of crazy to see this happening. And basically, I think what's happening is people are recognizing that the market is being held up by a few companies that are overvalued right now, or for that growth factor. And smart money, big money, is looking to find those undervalued stocks that were beaten down when they really shouldn't have been. So I think that's what's leading to this. Right now, the stock market is really being held up by just like the big tech companies that you can think of, like Apple and Microsoft. And we have earnings season coming up, so let's really hope that those guys do good. Otherwise, this could just be the beginning. Let's cross our fingers on that one. Uh, the Russell 2000, similar story, down almost 11%. And this is unfortunate because I actually sold a put on the IWM, which is based off the Russell. So again, we'll see how that goes. So far, I've been pretty lucky. I'm actually up almost 8% year to date, and that's because I've been using options to make some plays. Some riskier plays that I typically do. I've seen some opportunities, and I was able to apply some knowledge that I had to make a quick buck. And some people would accuse me of gambling, and I actually have a hard time saying it's not. But it's been working so far. Although I gotta say, even I'm getting a little too scared to be doing what I've been doing. So this is not going to be your typical return right now because obviously market's down 10%. It's just through some different option strategies I've been using that I'm up 8%. And I don't think that's going to be as reliable moving forward. So I'm going to actually stop doing most of that, unfortunately. And we'll get into that briefly as well. Uh, but something that's always fun to talk about is if this market's going down and you're a dividend investor, it doesn't matter. That just means you get cheaper stocks uh, to buy and get the higher yield. Your dividends can buy more shares, and that compounds quicker. And luckily, I've recently switched to using some income funds, and it's kind of fun to see this little chart come up where it just shows like here's just some passive income that I'm going to get throughout the year, and I don't have to do anything to get that income. Although I do have to like look at the negative unrealized loss of all these shares dropping down. But if we don't look at that, if we see no evil, at least we have some income coming in. And for me, actually, this is all just getting dripped back in. And I gotta say, I'm a little disappointed with Nusi. You would think Nusi wouldn't drop as much as it has for me, but that put protection doesn't kick in until there's like a 30% correction. We're at 10% now, and even then, I think they bought new puts, so that won't kick in for a while anyway. Uh, Something I did want to talk about is actually Netflix. So Netflix dropped significantly after hours. I think it's down 20% after hours. And basically, the thing that stuck out to me about the earnings call and stuff is they basically just said we ain't growing as fast as we thought we were. So, like, the growth is moving down. Even looking at the charts here, 2020 record year. Well, that's because pandemic came, so everyone's staying inside buying Netflix subscriptions because what it's gonna do all day inside. Well, we're gonna watch all these series. So, obviously, 2020 was high because of that. 2021, it makes sense to be lower because you probably scooped up a higher percentage of people than you would have in 2020. So I'm not too upset about 21 being lower, but like their projections for 2022 is our growth is slowing, guys. So I think this is something is significant in that big drop they were seeing from Netflix, and seeing Netflix get below that 450, like that hurts. 450 or Netflix has been like my baby, and like 450 has been like a awesome support level that you can always count on. And I gotta say, I'm pretty lucky that I didn't sell some puts at 450 when I saw earnings coming up, because I thought for sure that it would stay up there, and sure enough, it didn't. Netflix dropped significantly past that, and I think a lot of that's because they basically said we expect slower growth. They lowered pricing of their subscriptions in India to be more competitive with the local competition. And then they also talk about their competition, which is like one of the first times I've seen that pop up in their stuff. And they basically just said, hey, consumers have more choices than ever, and we're fighting that. And we're still gonna be the best, but they're out there. And they're talking like Paramount, Disney Plus, HBO Max. Like there's so many different subscription services. They're all starting to create their own content. And even I have a couple subscriptions I'm signed up for, and I still have Netflix. Like I'm gonna keep the Netflix subscription, although I gotta say there's been better content being generated on other platforms as well. And I can see why Netflix is now getting concerned about their competition. Uh, if we want to go ahead and look at the chart real quick, we'll pull this up and zoom in for you. And you can see that 450, I'm going to remove this Fibonacci because I think that's completely dead by now. So like 450 has been like a strong area where you could sell puts nonstop and make money, and now Netflix just dropped all the way down to 400. Like it even blew through this volume peak here. Now, sure, this is after hours, so we might see an increase come tomorrow in case people are saying it's buy the dip opportunity. I'm just gonna sit down on Netflix, and that's mostly because I have other positions that are in the money they have to deal with on my portfolio. Otherwise, I might be looking to sell some puts like in this region. But even then, I mean, this market is just showing it can be very wild right now. And it may just be better to kind of sit on the sidelines if you have the opportunity to do that. Or maybe slowly buy positions that you think are beaten up a little too much during this little downtrend. So here's Netflix. You can see it's RSI saying it's oversold, but I wouldn't believe that right now. So I think there's still more room to fall on Netflix. And even if it is at 400 right now, like I'm not sure if I'm going to be buying in right now or selling puts on Netflix. Although something that I thought was surprising was Corsair Gaming, and they're a stock that's been beaten down recently. They've been kind of hovering that $20 to $22 range, and during all of January here, like they really haven't moved from that range. Like this is a company that's like heavily shorted, and it's like no one wants to buy it anymore. No one wants to short it. It's just kind of just sitting there. Like people know it's a value play at this point, and you have the potential of like a short squeeze. So I think that's starting to bring some attention, and it held its price like these last 2 days when overall the market was trending down, which I just think is kind of interesting, and makes me wish I would have kept those $20 puts in play, because I think those would have been fine after all. They do have earnings coming up, and they can move on that a little bit, but it's just go and take this time to look for stocks that have been beaten down before this big drop. What's holding up right now, because they're probably not going to continue dropping down if the market continues trending down, which I hope it doesn't, but we'll see as we get through the earnings of the high-tech companies. Tesla, on the other hand, those of you in my Discord or in our Discord know that I've been playing a lot of Tesla lately, and I've been batting 100% on it, which is rare. I think I missed one. I lost like $200 on it, but aside from that one, been getting some crazy returns on Tesla. But Tesla just showed after our market that they've broken below 990. And after 990, if you look at the volume spikes, you don't have much to stop you at 850. Like the potential for it to go down quickly, down to like 675 is there. They have earnings coming up, so that could be a catalyst for a big movement. And I guess all I'm saying is I think Tesla's going to move a lot, like tomorrow and maybe next week. I just can't tell you which direction it's going to go. Seems like the market's trending down. Tesla has been moving with SPY a bit. Today they've been resisting the drop of SPY. Like they got stuck in like the 1030 range for a long time while SPY was showing a lot of weakness. And so it seems like Tesla wants to like pull everything up, but it's just starting to succumb. And I don't think I can play either bull or bear on Tesla at this point, because after this little support level here, like it could shoot down really quickly. So any of these zebras that I've been playing, like those would be like an automatic 100% loss if that happens. At the same time, like to the upside, like we know 1030 is going to act like a level of resistance, so going bull for a 30-point move with how much capital it takes to put that on just doesn't make sense. So like either go bear, which usually going bear on Tesla does not work out, or you go bull with a very short, small profit potential, because I think it's just gonna get stuck at 1030 again. It'll reject off that again. So I don't know. I just think it's finally time for me to put the Tesla car into the back of the shed and just let it sit there, because I made my money off of it and just kind of let it go there and sit in peace for a little bit. Uh, so people are scared right now because the market has proven it can go down rather quickly. Heck, it even did like a little fake out. Went up, SPY went up to 478 rather quickly. It went through some resistance levels I thought would be there rather quickly, like they didn't even exist, and then it shot back down. Like it's showing like it can give you whiplash. VIX is going up, which means premium's going up. So if you aren't in positions, you can sell positions. But I'll just say, take this as an opportunity to remember when you're selling a put, make sure you're okay with buying the stock at that strike price, because as the market's kind of proven today, like that can happen. And I think a lot of people are sitting in the money and they're starting to regret some of their decisions selling some strike prices. Just remember, if you like the stock, then sell the put. Don't sell puts in stocks you don't want to own, and it won't be an issue. You'll just be buying at a discount than had you bought it that day. If you're going bear in the market with options, make sure you stick to trades that have max defined losses. Don't go naked on Tesla, because who knows, maybe Tesla could shoot back up to 1250 and beyond, and then maybe sitting with them pretty hefty losses anyway. So make sure you stick to defined loss trades where the loss that you're playing with is acceptable. And I guess I just want to say, like, let's get through this battle together, guys. Once you get through this, I think you will have a lot more confidence in trading, because you've been through a pretty choppy time in the market. And if you come out on the other side and be fine, then you're going to do just fine. Hope you guys have a better day tomorrow if you had a bad one today. Let's hope for some green, and see you guys next time.